Well, today we're going to put oil as the future in focus. Oil surging over 2%, and this is the chart that tells you why. News came out today that Saudi Arabia has cut production to meet its OPEC production target reduction, but it could also cut production below 10 million barrels of oil a day. We have not seen that since 2003. There's been a lot of speculation if we're going to see compliance out of OPEC and how much compliance will we see. And the bulls think that Saudi Arabia is going to be front and center, and they're going to do whatever it takes to cut to help balance the market and balance those inventories. So this red line below 10 million barrels of oil a day, that's what you want to watch as we get production data in the first quarter. So now let's turn to the trade. Joining us from the CME is Tim Evans, Chief Market Strategist at Longleaf Trading Group. We're continuing to get headlines from Kuwait, from Algeria, even from Iraq that they're complying with these cuts. How much more upside can we see on these kind of headlines?
Hi, nice to be with you today, Alex. Yeah, I mean, I think there's a plenty of upside to be had, assuming we continue to hear rhetoric coming out of, all these Gulf states in terms of, looking to cut production. But what's going to matter most is the evidence. I think here the second half of January, we should begin to see evidence in the global supplies of crude oil that will show that, it's not just talk, but, the total supplies that we're seeing are reflecting, what they're talking about now.
Right. One of the issues, though, is that oil has a really hard time going above and sustaining prices over $55 a barrel. Why is that?
Yeah, I mean, crude oil is not going to be able to break through that $55 resistance level that we've touched. Until the market sees hard evidence that all of, the OPEC members and non-OPEC members that complied with this or that are part of this deal are in fact complying. I think once the confidence is in the market that is in fact happening, I think we're going to take out $55 and head closer to $60.
All right, so what's your trade short term?
Short term, I'm looking at the volatility aspect of oil, and I think the VIX in oil is very cheap, and we're a little under $33 right now. We think $40 to $42 is a very achievable target here in the next 2 to 3 weeks. So finding strategies to get long volatility in oil, I think, are advisable at this point.
Yes. So what do you see happening to oil volatility?
Well, a strong argument can be really made on either side of the market. There's some very bullish factors that we just discussed, but there's also some very bearish factors. If you looked at the DOE data yesterday, that was a pretty big build when we were expecting a 900,000 barrel cut. Gas stockpiles at the highest level since July. Distillates at the highest level since 2010. I think the implication in the price action that we saw yesterday following the release of that data, the market is expecting strong demand moving forward. So if we don't see that strong demand that the market's pricing in, you can expect a pretty healthy correction downward.
All right, Tim, Tim, great to see you. Thank you very much for joining us. Tim Evans, Chief Market Strategist at Longleaf Trading.